Thank you for joining us this Friday, the 13th of February. I'm Sophia Mavridis, and I'm joined today by Bell Financial Group's Chief Investment Officer, Will Riggall. Will, thank you for joining us today.
Oh, it's great to be here, Sophia, and thank you for having me along to have a chat.
Thank you. Well, it's been a big start to reporting season. The ASX 200 has advanced 1.74% week to date, with financials in the lead. However, we saw a lot of selling overnight in the US. So maybe we'll start with that, Will.
Yeah, absolutely. Look, it is a really interesting time in the markets at the moment, and we've had a big start to our reporting season. Yes, so we're seeing a very strong start to our month. A lot of that is coming in from better than expected results here. But as you said, what we're seeing is some volatility or more volatility in global markets, which certainly does have an effect on our market. So we had the S&P 500 down overnight, over 1%. A lot of that is coming from the concerns around AI capital expenditure and whether that's going to be able to lead to strong returns for shareholders, but also it's the unknown about AI, and that is which has led the software and services and hardware components of the market offshore and here. But now we're looking at concern around which parts of the software as a service components of the market are going to actually be disrupted by this technology change. If we move to Australia, we are far more insulated from that. Yes, we've had some of last year's names, such as WiseTech, which is under coverage by Bell Potter Securities and other names, come under pressure. But on the other side, it's this great rotation that's happening at the moment out of last year's winners into the more traditional components of markets, such as banks and resources, that has really paid off this week for Australian investors.
Yeah, banks, they're looking really positive this week. Financials are up. What are some key factors that you've seen with our CBA and the financial sectors this week?
Yeah, look, it's been a great week for CBA and actually bank investors on the whole. I guess over the last couple of years in where we've struggled to find areas of growth without that cyclical thrust to the market, those animal spirits that we look for. What we've had is some of the high quality names such as tech and banks do reasonably well. As the rotation has come, the bank sector has come off. We've seen CBA go from well above 180 down towards that 150 mark. But wow, what a week for CBA. We're seeing it up around 12 to 13% this week. And it's all on the back of what we understand and have always known. CBA is the best bank in Australia, but just because it's the best doesn't mean it's the best value. We've seen it come back towards average valuations, but we had a 4 to 5% EPS beat. We had strong top line growth, net interest margin actually holding up better than expected. But what was really important, what was really interesting, is that some of the comments that we heard from a couple of weeks ago from our central bank, the RBA, that has led them to raise rates. We're seeing that play through in the Australian economy, and the banks are a great proxy for that, is that the Australian economy is healthy, the consumer's healthy in Australia, and so is the corporate component. And from that, loan impairments and their assessment of bad and doubtful debts is much lower than expected, which is driving that earnings beat. So yeah, really strong, a good solid result from CBA, better than expected outcome. We've seen upgrades come through. And then what we've had is quarterly results from ANZ yesterday, and we've just had Westpac out this morning. Both of those are indicating this solid backdrop is here. And actually some of that cost data is coming through, which is really interesting part of it, because that was probably the major concern for markets, is just how they're going to deal with this wage inflation coming through, and they seem to be dealing with it really well. So look, we're not saying they're great value, but they're actually performing really well at this point in time, and no doubt a lot of our investors have banks in their portfolio, and they should feel comfortable that those dividends are looking pretty solid and will continue.
Solid dividends, so I assume good news for shareholders.
Yeah, absolutely. Yeah, we saw CBA come out and actually surprise on this dividend, giving a little more. And the payout ratio, or the way that corporates and companies pay out their dividends is a real indication of the confidence within the business, not just at the executive level, but it's at the board level. The board has control of the capital allocation strategy for a company. So when they are out there confirming dividends and actually increasing the dividends per share that they're able to pay, it's a real indication from a company that they're feeling confident about the future.
And Will, what about general insurers? They're looking at facing cost and competition headwinds with the rate cycle nearing an end. Do you have any thoughts there?
Yeah, it's interesting. Well, that's also part of the financial sector, but if
Yeah.
we break down to that next level of gigs, the market gives with one hand and takes away from the other. And our insurers, IAG and Suncorp, will report next week. We'll get QBE a little bit later in the month. IAG was out yesterday. We've seen these names sell off of late after a great period of strong performance. What the backdrop is the industry has gone from a period of irrational pricing and high competition into, with a lot of people pulling out of the market, we've seen the returns on equities improve back to almost peak level. And that ROE has been pushed by what they call it, the rate hardening cycle. And as we all know, sitting at home looking at our insurance and our car and home insurance bills, no doubt we know the prices have been increasing. But I guess good news for those that are insured is that we're kind of coming to the end of that period of significant increases, but that's not great news for insurers. So look, they've come back a bit. They're looking more closer to fair value, but we are seeing continued cost inflation coming through, mostly in the motor area, which is the home ground for IAG, where they're seeing more competition and also some issues around theft and such that is causing them to have to pay out a slightly higher claims at this point in time. So big deal, cautious, very, very much of a relative preference. It's the banks over insurers.
Right. And next week, we've got some big names reporting. We've got BlueScope, JB Hi-Fi, Treasury Wine Estate. That's on Monday. And then a big one on Tuesday with BHP, also the likes of Challenger and Net Wealth. What should shareholders be watching out for? Yeah,
look, we can learn a lot in these times. We're going through a period of significant change in the market, and that's somewhat nerve-wracking. It's really important to stand back and try and understand the trends, and it also provides great opportunity. So to be able to be nimble, the names that you've just mentioned, we've got BlueScope under a bid from Seven Holdings, so we'll see if there's any activity there. Treasury itself has been challenged by an oversupply of a bit of a glut of wine and some issues in the US, so we look for a strategic direction from the board there. And JB Hi-Fi will be really interesting. We've had Nick Scali come out this morning with a really positive result, but we also had Temple & Webster yesterday getting hit after talking about reinvestment needs. So look, it's a big week next week, and we look forward to it. No doubt we're seeing volatility at the moment. Certainly I'll be remiss if I didn't mention CSL as well. It's a name that alongside banks is also in a lot of portfolios. Yeah, Sophia. So if I'm taking a view, CSL is a great story, a global leader that's been built out of real strong intellectual property coming from Australia and going global. They faced a lot of challenges over the last period. What has been revealed in the last few days is some missteps by management. They've taken action. They've got an interim CEO now in place, Gordon Naylor. He knows what good CSL looks like. Whether or not he has the mandate to make those changes, we'll see. But we really look forward to more information around how they can bring CSL back to the glory days, because it is a great global company. It's in good markets, and we look forward for more information on that, and we'll certainly be communicating with you as we increase our conviction in the name. Yeah, definitely one that seems to have a strong outlook and one to watch. Will, thank you for sharing your expertise with us today, and tune in next week. We'll be joining us again each Friday of a reporting season. Thank you, Sophia, and happy investing, everyone. I hope you have a great weekend. Thank you, Will.